The Social Security Administration has officially confirmed that monthly benefit checks are increasing for some recipients. This update is crucial for every Social Security beneficiary in the United States to understand, as these higher payments will not go to everyone. Only certain individuals will see a boost in their benefits. Whether you receive retirement benefits, supplemental security income, Social Security disability insurance, or survivor benefits, it is essential to know where you stand and what to expect in the coming months. The increases are based on a series of adjustments that the Social Security Administration makes as we approach the new year. These adjustments include benefit recalculations, driven by factors such as cost of living adjustments, income reporting, and earnings from part-time work. The goal is to reflect real economic conditions, meaning inflation, wages, and consumer prices directly impact your benefit amount. However, this year is unique because not all beneficiaries will experience the same increase. Some will notice a clear rise in their monthly payments, while others may see smaller adjustments or no change at all. To comprehend why this is happening, one must remember how Social Security benefits are structured. Your benefit amount is not static. It is built on a formula that depends on your lifetime earnings, your work history, and the specific program you are enrolled in. For instance, those who receive Social Security retirement benefits see adjustments based on the cost of living increase announced each year, which is tied to the Consumer Price Index for urban wage earners and clerical workers. The adjustment for this year was officially confirmed earlier, but the actual payment differences are now appearing in updated deposit schedules and beneficiary notices. Additionally, the Social Security Administration performs individual recalculations each January, especially for those who continued working while receiving benefits. If you earned additional income in the previous year and it raises your lifetime average, your monthly benefit can increase. This applies mainly to retirees who have not fully stopped working, so if you recently reported additional wages or self-employment income, your January or February check might reflect a boost that is unique to you, not a general across-the-board increase. Now, let us discuss Supplemental Security Income and Social Security Disability Insurance recipients, as many in these groups are wondering whether their payments will rise. Supplemental Security Income is calculated differently from retirement benefits. It is based on financial need, meaning your income, resources, and living situation all play a role. The Social Security Administration adjusts Supplemental Security Income benefits when there are changes in federal benefit rates, which do increase slightly with each cost of living adjustment. However, additional increases can occur if your state supplements supplemental security income, or if your household circumstances change. For example, if you start living independently, or if your spouse's income changes. In short, supplemental security income increases are possible, but they are far more individualized depending on state and personal financial factors. For Social Security disability insurance beneficiaries, those receiving disability insurance, the higher checks are tied directly to the same cost of living increase that retirement beneficiaries get. But here is where the "only for certain beneficiaries" part becomes clear. Some Social Security disability insurance recipients have their benefits reduced due to work activity or income from other sources, which means even though the cost of living adjustment applies, the final deposited amount may not show the full increase. Others might receive a higher check if they have dependent benefits or if their disability benefits are recalculated because of a change in earnings history. The bottom line is that the Social Security Administration applies these updates automatically, but the final amount depends heavily on your individual case. Another major reason for higher checks among certain groups involves delayed retirement credits. Many Americans choose to wait past their full retirement age before claiming Social Security, which can significantly increase the benefit amount. The Social Security Administration awards roughly 8% more for every year you delay, up to age 70. This means that people who are just now starting to receive their benefits, especially those who delayed until late last year or early this year, are seeing substantially larger first payments compared to those who started earlier. In a year with high inflation and economic uncertainty, those delayed credits are becoming even more valuable. There is also an important category of beneficiaries seeing increases due to earnings record corrections. The Social Security Administration continuously updates and audits work histories, and when an error or missing earnings report is fixed, the monthly payment can rise. These cases are relatively rare but very meaningful for those affected. For example, if an employer failed to report wages properly in the past, the Social Security Administration may recalculate and issue retroactive payments. That is why many seniors are now reporting that their checks are slightly higher than they expected, even if they did not receive a cost of living adjustment notice. These are the so-called quiet increases, the ones that happen in the background, not through headline announcements. Now, let us take a closer look at the payment schedule and what beneficiaries should expect. Social Security payments follow a structured system. Those with birthdays in the first third of the month receive payments in the second week. Those with birthdays in the middle third receive them in the third week, and those with birthdays at the end of the month get them in the fourth week. Supplemental Security Income payments, on the other hand, are typically sent on the first day of each month, unless that day falls on a weekend or holiday, in which case the deposit arrives earlier. The important point is this: if your payment date is approaching and your check amount is different than usual, that is the result of one of these confirmed recalculations. In some cases, the Social Security Administration sends letters or notices explaining the reason for an adjustment. These notices may mention cost of living adjustment updates, new income data, or eligibility reviews, but it is also common for many recipients to see changes appear in their bank accounts before any formal explanation arrives in the mail. That is why it is always recommended to log into your My Social Security account online or check your benefit statement through your annual summary letter, which shows exactly how your payment was calculated. Before moving forward, it is worth emphasizing that these benefit increases, while limited to specific groups, represent an ongoing effort by the Social Security Administration to maintain purchasing power for seniors and people with disabilities. Rising prices for groceries, utilities, and medical care have been among the biggest concerns for retirees, and while these higher checks may not solve everything, they do provide a bit of breathing room. Still, it is critical to know whether you qualify because not everyone will see the same outcome. That is where the second half of this update comes in. Understanding exactly who qualifies for these higher payments, how these increases are calculated, and what to do if you believe your benefit amount is incorrect or outdated. Now that we have covered how these increases came to be, let us go step by step through who actually qualifies for these higher Social Security payments and what factors determine eligibility. First, the largest group seeing an increase right now are retirement beneficiaries who have newly updated earnings records or delayed retirement credits. If you reached full retirement age recently and waited beyond that point before claiming benefits, your check is automatically higher. For example, if your full retirement age was 66 and you waited until 68 to start receiving benefits, you are now getting about 16% more than you would have received 2 years ago. Those individuals are part of the group now reflected in the Social Security Administration's higher check confirmation. Second, some beneficiaries are receiving increases because of family benefits. When a retiree, disabled worker, or deceased worker's record supports payments for dependents such as a spouse or child, those benefits are periodically adjusted. When the primary worker's benefit increases, it can trigger a rise for eligible dependents as well. However, these cases are reviewed individually, meaning the increase does not apply to everyone at the same time. It depends on the family's overall benefit cap and whether the dependent share reaches its maximum limit. Third, those who worked part-time or seasonally last year and reported new wages are now being rewarded. Social Security uses your highest 35 earning years to calculate your benefit. Even a modest addition to your lifetime earnings can shift the average upward, resulting in a higher monthly payment. The Social Security Administration automatically rechecks your earnings history each year using W-2 and self-employment tax records, so you do not need to file a special request. But it is still smart to verify that your earnings have been properly credited. Small corrections can mean noticeable differences over time. On the other hand, some beneficiaries will not see any increase this year. Those include individuals who already reached their maximum benefit level, people whose incomes exceed the allowable limits for Supplemental Security Income, and recipients who have overpayments or deductions applied to their checks. The Social Security Administration has strict policies about recovering past overpayments, and in those cases, the agency may withhold part of a cost of living adjustment increase until the balance is cleared. This is why some seniors report smaller deposits, even though they were expecting a boost. Another group affected by varying check sizes includes dual-eligible recipients, meaning those who receive both Supplemental Security Income and Social Security retirement or disability payments. When both benefits overlap, the Supplemental Security Income portion may be reduced as the Social Security benefit rises. In other words, the Social Security Administration balances the two programs to ensure you do not exceed the maximum combined limit. This often confuses recipients who see an increase in one area but a decrease in another, making the total look nearly unchanged. That is why it is important to understand how both programs interact. As for new applications, people who recently filed for benefits are often surprised to find their first checks are higher than those of friends or relatives who started earlier. This happens because every new claimant's benefit reflects the most recent cost of living adjustment automatically. If you applied after the adjustment took effect, your starting point is already higher. For example, someone claiming benefits in early this year will see the new rate applied from their very first payment, while those who started in previous years had to wait for each year's adjustment to gradually raise their total. Let us also talk about another important factor, Medicare premiums. Even though higher checks sound like great news, part of that increase can be offset by changes in Medicare Part B deductions. The monthly premium for Medicare is automatically deducted from most beneficiaries' checks, and when that premium rises, it can reduce the net increase. So, while the Social Security Administration confirms higher gross benefit amounts, the actual take-home may differ. This is another reason why some recipients are reporting smaller than expected net deposits. Despite these differences, it is important to recognize that the Social Security Administration's confirmation of higher checks signals a positive direction for many households. It means that benefit recalculations are working as intended, reflecting inflation, updated earnings, and fairer distributions for those who have contributed longer or waited to claim later. It also means that seniors who continue to participate in the workforce or correct their records are being properly rewarded with higher payments. If you have not yet seen an increase but believe you should, the best step is to review your benefit statement. Look at your current payment, compare it to last year's, and check your annual cost of living adjustment notice. If your income, work history, or dependent situation changed, it is worth contacting the Social Security Administration directly to ensure your record is accurate. Many beneficiaries discover after review that they were due a small increase that had not yet been processed. And the Social Security Administration often issues retroactive adjustments when that happens. As we wrap up this discussion, let us summarize the essential message. The Social Security Administration has confirmed that higher Social Security checks are indeed being distributed, but these increases are not universal. They primarily apply to those with new earnings updates, delayed retirement credits, recalculated records, or certain dependent benefits. Supplemental Security Income and Social Security Disability Insurance recipients may also see adjustments, but the amounts vary widely depending on income and state supplements. And remember, even if your gross benefit rises, Medicare deductions can influence your final payment. What matters most right now is awareness. Every dollar counts, and understanding how these increases work helps seniors and people with disabilities plan their budgets more effectively. In a time when living costs are rising faster than ever, knowing exactly what you are entitled to and how to secure it makes all the difference. So, if you are one of the many Americans receiving Social Security, take a few minutes this week to review your payment details, confirm whether your check reflects the new update, and if not, verify your earnings record. These small steps can ensure you receive every bit of support you have earned after years of contribution and hard work. The system may be complex, but staying informed is the most powerful way to protect your benefits and your peace of mind. As we move deeper into the new payment cycle, the most important message for every Social Security recipient is this. Even if the Social Security Administration has confirmed higher benefit checks, those increases depend entirely on your individual eligibility profile. Many people are seeing deposits that are slightly higher than before, but others are finding that their amounts remain unchanged. This variation does not mean there is a mistake. It means the adjustments are highly specific, designed around income history, tax records, and living situations that are unique to each person. The Social Security Administration has explained that these selective increases are part of the annual recalibration process. Every January, Social Security goes through an extensive review period where benefit formulas, wage reports, and cost of living data are synchronized. For some retirees and disabled workers, this leads to a larger monthly check. For others, it simply means stability, a continuation of the same amount without reduction or increase. And while that may seem unfair on the surface, it actually reflects the administration's effort to keep the system sustainable and aligned with real-world earnings and inflation patterns. Let us take a closer look at how these recalculations actually work behind the scenes. When the Social Security Administration reviews your record, it looks at your total lifetime earnings history, indexing those wages to account for inflation. If new wage data appears, say from a part-time job, self-employment income, or corrected employer reporting, That information can raise your average indexed monthly earnings. The higher your average indexed monthly earnings, the higher your benefit formula result, which directly affects the amount you receive each month. The Social Security Administration then applies a benefit formula that replaces a certain percentage of your average income. The more you have earned over time, the larger that portion becomes. However, there is another layer: maximum taxable earnings. Each year, there is a limit on how much income is subject to Social Security tax. For this year, that limit rose again, which means workers who continue earning above that threshold contribute more to the trust fund and may see slightly higher benefit calculations later. Those still paying into the system beyond retirement age benefit from this update more than anyone else. It is another example of why only certain beneficiaries experience a noticeable boost in their payments right now. Another factor that affects benefit increases is the timing of your claim. The Social Security Administration's benefit formula rewards those who delay claiming, but it also locks in your benefit based on the year you start receiving it. If you began benefits several years ago, your base amount grows only through annual cost of living adjustments. Meanwhile, new claimants are entering the system with a higher base rate because of more recent wage growth data. This creates a natural difference between long-term beneficiaries and new recipients. That is why some neighbors, both the same age and both retired, may see different check sizes even though both worked full-time throughout their lives. Now, let us talk about something equally critical: how these higher checks are helping those who need it most. Rising costs continue to affect seniors and people with disabilities, especially when it comes to groceries, utilities, rent, and medical care. The confirmed higher checks mean that the Social Security Administration recognizes these pressures. For retirees with limited savings or fixed incomes, even a small increase, $30, $50, or $100 more per month, can make a difference in affording essential items like medications or heating bills. Some states also offer automatic cost of living supplements that add to the federal benefit. While this is not controlled by the Social Security Administration, state programs can create an extra layer of support. For instance, certain low-income seniors receiving Supplemental Security Income may see their total monthly deposit rise slightly more than the federal baseline due to state funding. It is one more reason why benefit increases vary across the country. A senior in California, for example, might receive a slightly larger total payment than someone in Texas, even though both qualify under the same federal guidelines. For many seniors, another important detail is how these benefit changes interact with taxes. While Social Security benefits themselves are not fully taxable, a portion may be if your combined income exceeds certain thresholds. This means that higher benefit amounts could slightly affect your tax liability. The Social Security Administration sends out benefit statements each January to help recipients understand how much of their benefit may be subject to federal income tax. It is wise for beneficiaries to review these statements carefully and plan ahead for any small adjustments when filing their returns. Now, if you are watching this and wondering, what can I do to make sure I do not miss out on a potential increase? Here is what you should focus on. First, check that all of your past work income has been reported correctly. Missing or incorrect records are one of the most common reasons people receive less than they should. You can review your lifetime earnings report through your My Social Security account. If you find a year with missing income, submit proof, such as a W-2 or tax return, to have it corrected. Second, if you are still working part-time while receiving benefits, make sure to stay within the annual earnings limit if you are below full retirement age. For this year, the limit is higher than it was last year, meaning you can earn more without reducing your benefit. However, if you exceed that limit, the Social Security Administration may temporarily withhold part of your benefit, which could make your checks look smaller, even though your long-term calculation will be higher later on. Understanding this balance between short-term deductions and long-term gains is key to managing your Social Security wisely. Third, for Supplemental Security Income recipients, any change in living arrangements, income, or resources should be reported immediately. Failing to update your file could delay your payment adjustments or lead to overpayments that need to be repaid later. Many seniors lose potential support simply because they do not notify the Social Security Administration of a small change, such as a roommate moving out or a drop in household income. These small updates can actually trigger higher monthly payments. It is also essential to recognize that Social Security benefits are recalculated for life. This means increases can occur at any time, not just once a year. If you continue to work, If your family status changes, or if a correction is made to your earnings record, the Social Security Administration may send you a new notice indicating a higher amount. Some of these updates happen quietly without major announcements, so it is a good idea to review your statements every few months. Finally, let us look ahead. As the Social Security Administration prepares for another cost of living adjustment next year, these selective increases serve as an early indicator of how the system continues to respond to inflation and economic shifts. Economists expect that even with modest inflation, benefits will continue to rise gradually. But for now, the message is clear. The confirmed higher Social Security checks are real, and they are already reaching certain beneficiaries across the country. For many, these higher payments will help restore a bit of balance in their monthly budgets. For others, they are a reminder to double-check their records, make sure their information is current, and ensure they are receiving every dollar they deserve. Social Security remains one of the most powerful safety nets in American life, a system built on decades of contribution and trust, but it is only as strong as the awareness of the people who depend on it. So, as we close today's update, take this moment to look at your statement, compare your deposit, and make sure everything matches the latest Social Security Administration confirmation. If you notice a change, understand where it came from. If your payment has not changed yet, know that it might in the months ahead, depending on your record review and updates. And most importantly, remember that every adjustment, no matter how small, represents the government's ongoing effort to keep benefits fair and reflective of real economic conditions. To every senior, retiree, and beneficiary watching, you have earned these benefits through years of work, service, and contribution. This new round of higher Social Security checks is a recognition of that. Stay informed, stay prepared, and keep an eye on your payments as the new year begins. Every dollar counts, and being proactive about your benefits ensures you receive the full support you deserve.